In terms of, your staples in the market like Bitcoin, that I'll say alternative monetary policy, this kind of geopolitical hedge, store of value type of investment profile, it definitely feels like we've kind of sucked all of the surprise, as you say, out of it, because even with some of this more bearish news coming out, we're still sitting here chopping sideways around the $86,000 mark. So yeah, this is a period of time where we are seeing some stabilization.
Friends, DeFi is having a moment. Uniswap Labs web app and wallet connect you to the excitement. Swapping and bridging are simple, low-cost, and lightning-fast across 13 chains, including Base, Arbitrum, and Unichain, the new Layer 2 network designed for DeFi. Thanks to deep liquidity on Uniswap Protocols, you get minimal price impact on every trade, now with even greater efficiency through Uniswap v4. Swap, send, on-ramp, off-ramp, and bridge into a bright future. Get started at uniswap.org. Welcome to Markets Daily, everyone. Today I'm joined by a very special guest host, Head of Product and Research at CoinDesk Indices, Andy Bear. Tariffs and inflation have been dominating the headlines, and on today's show, we're going to talk about their impact on risk assets. Our guest today, Blake Heimann, who is the Senior Associate of Quantitative Research at WisdomTree, says he has a positive medium to long-term outlook despite the headlines. We'll dive into DeFi adoption trends, whether 2025 could truly be the year of the crypto IPO, and how institutional investors are approaching crypto from direct allocations to indexes and equity plays. Blake, welcome to Markets Daily.
Hi, Jen. Thank you for having me. Hi, Andy.
Morning.
Of course. Thanks for being with us. Now, we like to start this show off asking our guests what they're watching this morning. What are you watching? What's capturing your eye as we head into kind of shaky macroeconomic waters?
Yeah, so if you just keep track of what's happening in the headlines, a lot of it's very focused on the tariffs that are about to be put in place out of the US. So that's causing a bit of a market turmoil, and as such leads to that sentiment kind of deteriorate a bit. So that's the overall sentiment is one area that's in the liquidity of the markets is one of the key things that I tend to look at. So taking things, a bit higher level and a step back, we really just are kind of acknowledging how things have shifted more recently with, I'll say, this macro cloud that has been driven by this higher for longer inflation, or this inflation that's been a bit stickier than we've wanted. Some of the US policy that is leading to additional volatility and questions and uncertainty around, what the future looks like for assets broadly. And then risk assets obviously have a much higher sensitivity to that. So we're kind of watching all these different factors all kind of being conflated while acknowledging that there are a lot of positive things in the medium to long term that are also kind of underlying this overall sitting underneath this macro cloud that we see as very positive in terms of our outlook.
Blake, the macro cloud certainly got off to a start with surprises, right? There were policy announcements over weekends, and things came that were different from what was expected, and that brought equity market volatility, higher VIX, lower crypto. Do you feel at this point, especially given the market's reaction yesterday to the 25% auto tariff news, that we're kind of at surprise fatigue? We might still be numb, but maybe it might be harder to shock the market at this point, although you could certainly disappoint it?
I think that is a very accurate way to position things, particularly when you're speaking about, say, Bitcoin or crypto markets broadly. Now, the altcoin ecosystem is quite a bit, I think there's more idiosyncratic moves there, and, anything that's shifting that liquidity profile of the market or the risk sentiment can really drive those assets around. But in terms of, your staples in the market like Bitcoin, that I'll say alternative monetary policy, this kind of geopolitical hedge, store of value type of investment profile, it definitely feels like we've kind of sucked all of the surprise, as you say, out of it, because even with some of this more bearish news coming out, we're still sitting here chopping sideways around the $86,000 mark. So yeah, this is a period of time where we are seeing some stabilization.
You mentioned that medium to long-term optimism. Talk to me about any trends that you are watching that you wish more people were talking about right now.
Yeah, I would say a lot of it comes down to the technological innovations that are taking place. Now, there's obviously plenty of things happening within the, I'll say, the more pure decentralized ecosystem with the developments that are happening, say, within altcoins. But it's quite interesting to see this bridge between, I'll say, the equity or more traditional business space and, say, DeFi or kind of this more ground level foundational technological innovations that have been enabled through smart contracts and blockchain technology. So, for example, just seeing what Coinbase is doing with there was the rumors around some acquisitions. There's been actual acquisitions taking place with Kraken. So they're enhancing their product offerings. You're starting to see in some processes where you're seeing the developments with tokenization really taking off. So these are just early stages, particularly, I'm sure you've discussed it as well in the past, but Coinbase's Bitcoin-backed lending Bitcoin-backed lending program that is enabled by DeFi in the back through Morpho. So this type of, I'll say, convergence between this traditional economy and the traditional financial services ecosystem with the DeFi ecosystem that's running on these L1s and L2s, I think is quite a profound shift, particularly given you have this transition to a much more, I'll say, positively positioned regulatory environment in the U.S. with, some of the people that they put into place to help support this asset class and support this technology to maintain that leadership. So I'm very, very bullish on this technology finding product market fit and starting to bridge that gap between what we're used to seeing, which has been this decentralized economy growing significantly. And I still see that being the trend. But I see that convergence taking place between that and the traditional economy, where we can really see some major, major disruption. And I think the underlying technologies and the protocols that are enabling this stuff to happen, as well as even the firms that are tapping into it to really bridge that gap, are set to do quite well going forward, even amidst some of this, these scares that we're having from the broader level, the macro perspective.
Now, you're on the front line, and we have an expression, at least in my business, where we call traditional investors trying to allocate to crypto 5%ers, right? Because you might get 5% of their portfolio. You're unlikely to get 5% of their attention or research time. How do you find those kind of conversations landing? How do you summarize what kind of themes? Many people recently feel like the technology promised by DeFi is slow to come. So given everything that you've said, which we don't disagree with, how is that message being received, and how do you maximize the effectiveness to get people to really commit?
Yeah, so our experience with it, so, we've been in the business for a while and been involved in crypto for, 5 or more years now. And the education and I'll say the curve, the learning curve that has to take place from institutional and, say, your TradFi investors is quite big. So getting to the stage where people understand Bitcoin, understand the investment case behind Bitcoin, why people find it interesting, is one level. Getting into, Ethereum, the smart contract platforms, is another level, so they can kind of start to differentiate the investment profile and some of the advantages of each, and why, they fit in a portfolio, and kind of what they can offer through just the technological advancements that they've made. But then taking the third step into, say, the protocol ecosystem, where you're starting to have applications that are serving as a solution, that is another level. Now, the beauty of this whole education process is it takes some time to break the Bitcoin barrier, at least we've seen historically. Now, I would say most institutional investors have gotten on board, or at least understand it to a certain extent. So that's a great step. They're starting to get on board with the layer ones and the altcoins, et cetera. But one of the things that's really interesting is what seems to resonate quite well is when you start to think about how similar some of the, I'll say, and we have to be careful with some of the language here, particularly what we historically saw with the SEC in the US, but the cash flowing type of capabilities that some of them offer. There was just the announcement with Uniswap making another headline around turning on the fee switch. And this is another beautiful thing that traditional investors love. They love their cash flows. So that has been, as we start to bridge all these pieces together, it takes some time, but you can start to see their eyes widen when all the dots start to connect across this ecosystem. And that's when you take them from being that, 5%er to, actually being somebody that is a full-fledged advocate for the ecosystem.
I'm curious to hear from you. So many people who've come on the show have called 2025 the year of the crypto IPO. You mentioned Kraken there, which is one of the firms that is expected to IPO this year. Given the macro environment and given the need for more institutional investor education, talk to me about how you make sense of these IPOs. What do you expect to see should the handful of firms who are expected to IPO in the United States do IPO this year in the current macro environment with this need for in investor education? Just make sense of that for me. What do you expect to see?
I think it's something that is bound to happen. I mean, at the end of the day, these firms, need more capital, and say the private investors and the founders need exit liquidity to a certain extent. So this is kind of the natural evolution. So I think that is, very much, the next stage for these firms. Now, in terms of those investing, I think institutional investors are definitely on board with this, because there's many ways, like with the investors we speak to, there's many ways that they're gaining access. So for the ones that are still very early stage, they're just getting into, say, the beta of the ecosystem. So just allocating to, either a broad-based index or even just a single asset like Bitcoin being, the one that dominates the market by 60+% of the overall market cap, to get you that kind of, I'll say, broad beta exposure as part of that small slice in the portfolio. Now, there's others that are expanding to get access in the equity space, getting access in the venture space, even, hedge funds and other types of vehicles that are more sophisticated. And they're creating these entire, I'll say, alternative sleeves of crypto-oriented types of exposures. And that is quite an exciting thing. So I see, say, the IPOs fitting into that space quite well. And one of the other benefits of that is it's a traditional company. So the investors can evaluate the cash flows and look at these things. And they're seeing that, if you just look at Coinbase in terms of the overall trading or the revenue they're generating from trading fees, and now they're obviously involved in custody and so many other new things, given what they've done with, the base blockchain that would likely at some point lead to more revenue impacting the bottom line. So I think companies or investors are on board with this, but they're also going to naturally be mindful of, what happens with IPOs. You tend to have, day one, you might have a pop, and then, you have a little bit of underperformance. It's in many research papers if you Google them out there. But sometimes, and then over the long term, things tend to stabilize and, kind of go back to being the, driven by the performance of the company. So there is that volatility around the event itself. But nonetheless, for the long-term types of exposure, this is a very, very exciting space. So I'm optimistic for these IPOs.
So, there's a lot of work that has to be done to pick winners there. And I guess we all, you want your clients to have a good experience and also to not have to question their own decisions. You mentioned indexing, and we have a great benchmark index, CoinDesk 20, that does a lot of the things you mentioned. It takes a little bit out of Bitcoin market cap weight to give more exposure. Tell us how you think an investor with an index related investment is going to be able to just be in the space, but not have to think about timing, not have to think about asset selection.
I mean, that's the beauty of the indexes, is in being able to trust the overall methodology and the provider that's providing that and doing the underlying research to ensure that they're investing in reasonable things here. Because if you go down the market cap spectrum, you do find there's plenty of meme coins that even rose to the top. So those that don't necessarily have the, I'll say, the strong investment profile from a traditional investor perspective versus something that's more speculative like a meme coin is an important differentiation. Obviously, liquidity is a major important feature here. And there are many others that really, you need to take into account that is important here. So by essentially allowing the investor to focus on, okay, I want to be the traditional investor focused on my asset allocations, my views going forward, my risk return profile. So understanding that and being able to just park that money in a beta product that they know is diversified and in assets that they can trust are well vetted, so that they get the exposure they want without having these additional risks and additional overhead that's involved with building out and managing all those positions. So it really is a great evolution for the market. And just also helps demonstrate a lot of the maturity that we've seen now that we're having broader based benchmark indices out there that are having so much more assets and volume tracking those indices. So it's a very exciting time. So I flag that as like a key pin in my market evolution, market maturity roadmap, if you will.
Blake, thanks so much for joining Markets Daily today with Andy and I.
Of course, it was an absolute pleasure. Thanks for having me.